Hey everybody, Allison here. I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in tonight's video, I want to talk about Amazon and two different trade ideas to consider. First of all, Amazon is having earnings coming up next week. And we have a lot of the other FANG symbols and big names having earnings this week as well. So to play kind of off that earnings ideas, there are two different things that you could consider putting on here. First of all, for a trade to put on prior to the earnings announcement, I might consider something that benefits from theta decay, right? And the reason why is Amazon overall has been in some strong consolidation recently, right? It's just been trading flat. More recently, however, as of today, we've been able to break above the ATR trailing stop as resistance and turn it into support. We also have Bollinger Bands opening up. Our moving averages are trying to cross back into a bullish position. Momentum is building up above the zero line with room to move higher. And right prior to this, we had a bullish signal on the compound breakout tool. It technically canceled out, but it hasn't printed a pullback signal like we've seen here or a choppy consolidating signal. And so for that reason, I would still go off the overall bullish sentiment, but it does mean I want to be a little bit cautious on the strategy I might implement here. So even though I do like the bullish sentiment trying to spark up here, I do want to be very respectful of the consolidation that we've been seeing prior. So to take advantage of that consolidation as well as that potential move higher, for this week's expiration, to still take advantage of that theta decay, I might consider something like an unbalanced put butterfly. Currently right now, the one priced at 3,200 with 3,205 and 3,195 as the wings would place our bench strike right around our moving averages. So that means if the price does move down, as long as it can hold support levels here now, this has a good probability of working out for us. So the idea behind this trade is that it's a standard butterfly with the additional contract of a credit spread. That's what allows us to receive an overall net credit when we open the trade, in this case of 40 cents. Now, what does this mean? Well, if Amazon moves higher, or it chops around, we'll get our 40 cents of credit. Even if Amazon moves down, as long as it can stay at 3,205 or higher, we'll receive the 40 cents as a profit by the end of the week. If Amazon does move lower but stalls at 3,200, which certainly has a good probability now that we're trading above it and it's turned into support, as well as it being a psychological level, then we actually have the max profit potential of 540. This is the benefit of having the butterfly on top of having the credit spread. It gives you that forgiveness factor in case Amazon does move down to that level. The risk on this is if Amazon moves well below 3,200, right? If we move down to 3,100 again to test that, then you need to be okay with the 460 risk here. So this is what I would take a look at for this week. If it looks like we're opening lower tomorrow on Amazon, or it looks like we're going down to 3,200, consider adjusting these strikes down to where your pin's at 3,100. That's been an excellent level here in this consolidation to do this style trade, right? To do an unbalanced put butterfly, or to do a straight put credit spread at that level has been working out quite nicely. So if we do open lower and are hanging out around here, consider adjusting that pin down to 3,100 and still playing off that theta decay and potential move up, or at least staying in consolidation for this week. The other thing you could consider doing, and you might wait to put this on until we're closer to the actual earnings announcement, especially if you want to hold it as a lotto trade through the announcement, is to do a broken wing butterfly to the upside, right? If you think that this is going to bounce up, much like Microsoft did going into its earnings the last few days into the announcement, or like Apple has been doing the last few days into its announcement, right? We've seen a lot of these symbols come from consolidation and try and bounce up at least, at most a week, maybe the last few days going into the news. So if we think Amazon could do something similar and we want to set up a trade for that now, what we could look to do is go out to next week's expiration and do something like a broken wing butterfly. So here, for example, is a 20-point, 10-point broken wing butterfly. 20 points on the debit spread, 10 points on the credit spread. And currently it's a 405 cost basis. But why I like this trade is because it allows for that bullish sentiment to the upside up to a level that we could stall at, right? 3,400, a nice psychological level. We've had highs go up slightly above that level, just shy of that level too, and kind of stall out. So it makes sense to put a pin around there, right? And what this also allows, though, is a forgiveness factor in case the price does just continue to the upside, right? If Amazon, which is known to be a very volatile symbol, is very dramatic, right, and sees that volatility spike up, well, it gives that forgiveness factor because our credit spread is a smaller width than the debit spread. So if we do go in the money on this completely, well, we still actually have a profit potential on this trade of about $5.95 given the current mark. If we pin at 3,400, our max profit potential is $15.95. And then, of course, if we don't make it up to our strikes, we need to be okay with the 405 risk. But once again, great trade because it's cheaper than jumping into just a straight debit spread, right? A straight debit spread that's 20 points is 755. So it greatly reduces our risk, which I'm all about. And it has that forgiveness factor in case Amazon does explode to the upside, like we've seen in Apple and Microsoft, where they just are stair-stepping higher into the news. Whether, it goes through with the news or not, it stair-step higher into it to potentially allow that profit in case this goes in the money. So those are the two trade ideas around Amazon. For those of you who want to know more about butterflies or how I like to compound them and combine them together to help really offset risk and allow for still an excellent profit potential and that forgiveness factor, please feel free to join me on my free webinar that I have tomorrow coming up. I'll post the link down below in the summary, but I'm going to be talking about the strategy and how I used it last year into this year to help grow my accounts, and maybe it will be something that you guys find beneficial too. As always, may the trade be with you, and I look forward to talking to you next time. Bye.